Hi everyone. There's something about the S&P 500, which is 500 large US companies, which worries me. It's something which I've not seen in ever. Okay, and it's this. Let me just pull back. That's the S&P since before I was born. All right, so that's 1962. I was born in 71. I want you to look at this. This is a measure of momentum. And if we just zoom in even for this millennium, okay, so for the last 20 years, you can see this level over here that I'm showing. That means it's overbought. But it's at a level which it's not been at before. It's actually higher than even here, and the problem is, and it's something I've stated before, when it reaches these levels it tends to have a couple of months, and each one of these bars represents 1 month, a couple of months where it falls. So 1, 2, 3, maybe even 3 months, okay, when it gets to these kind of levels. Now, does that mean I'm about to sell and sit on the sidelines? No, that's not what actually happens in the real world. In the real world, what happens is you're well aware of this and you make sure you've got stocks which will protect you. And which are those? Well, ones which will fall less and rebound quicker, the resilient ones. And you know which they are if you follow me on the Telegram channel, and the ones that I look for. And in a way, that's a nutshell of the investing problem. You see, what people try and do is they try and dip in and out thinking that, oh, it's going to fall. Well, the problem with that is if they did that this year, they just missed one of the biggest rallies in stock market history. And therefore, what's logically the best thing to do is to have those resilient stocks, which are the ones which I hunt for, the ones with the strong growing cash flow, the ability to convert capital that's in a company into cash. The ability to convert capital into cash is what stands companies apart. And the proof that they can do that is not just what's on their balance sheet, but is on their average performance, and ensuring that average performance isn't volatile. It doesn't have wild swings, because then that means the company's got a consistent way of converting capital into cash. That's all every company in the world ever does. Doesn't matter what business they're in, whether they're Tesla or Microsoft, or whether they're Costco or Square or whatever it is. Their job is to convert capital into cash. Anyway, biggest worry is this. It doesn't mean I'm getting out of the market entirely, but don't be afraid if we get 3 months of falls. Like I said, I'm not betting on it, because these are the times when you see everybody getting bullish. But just be careful. Just be careful out there.